Greetings, everyone. Welcome back to the Turning Point. Today we have David and Versan. How are you doing today, gentlemen?
Great.
Good, great.
Doing great. I see we were a few minutes late. However, we were setting up the lights, the camera, everything to be right. And we have a lot to talk today. I think we have some people joining us already. I see a lot of comments.
Mhm.
So welcome, everyone.
Welcome.
And the one thing that is getting my attention this week is how the US dollar is getting weaker by each day. So I think we might start talking about also the correlation between the M2 money supply, which has been increasing exponentially. And I'm talking about the global M2 money supply, which has a direct correlation with the price of risk assets that goes for crypto, that goes for gold as well. And why not to start with Versan or David? I don't know which one of you want to take the lead and
Sure, I
share
can.
about what's going on. And that's also the title that I have chosen for my video. I know we all have different titles, but I really wanted to talk about the M2 money supply. And I want to hear your thoughts on that.
Well, with the dollar, I mean, we are seeing a weaker dollar right now. And in fact, I'm just going to share my screen and let me just see if I can do this. Yeah, okay. Let me just try and do this. It's always interesting. Yeah, there we are. This is what I want right here. Okay, so we can see right now, like we're under a dollar, which is wild, to think. And this is on the daily. Now, if you were to actually see the year to date, you can see from January onward, we have just been crashing. And the dollar is going down now. In this digital asset space, there's a direct inverse correlation. When we see the DXY start to tumble, usually these assets and anything else measured against it starts to really increase. And of course, right now we're seeing major, global, gold prices just go into new all-time highs and stuff like that. And I wanted to share that so that people could literally see when you see it yourself and you can see like where we're going now. Why is that happening? Well, of course, you got this whole tariff thing going on. Of course, that plays a part of it. But I do believe that, we will end up seeing this. I think this is the great temptation. The government wants to actually, lower rates and increase liquidity in the marketplace. I think, Edo, you're going to talk about that in a little bit here, but that is a big time deal. They are going to do that. And a lot of times people say, oh, no, that's not happening. No, they are going to lower rates. This is just a dog and pony show. When you hear Trump saying, oh, well, we need the Federal Reserve to lower rates, and you got Jerome Powell, well, we're not really going to, that is just a bunch of theater. They absolutely want to do it. They're going to inflate the system like nobody else's business. Of course, that's going to send these, anything measured against the dollar in terms of value is just going to go up in price, right? So it's not so much that gold went up, it's that the dollar went down. And that's the same thing when you're talking real estate, these digital assets and all this kind of stuff. You need to have a safe haven against the dollar in an environment like this, because that is exactly what they're going to do. Trump knows, and I believe the goal is to inflate the debt away. Basically, I believe that that's what's coming down. And of course, that has an impact on the money supply. When you're inflating, what are you doing with the M2 money supply? You are increasing it. And you're increasing it because you're just minting more. And they're looking for any and every excuse that they can possibly get in order to do it. And what you're really seeing, if you really want to know what the end goal is, it's a transfer of power and wealth into the hands of the central banks. That's exactly what it is. That's what it's designed to do. It's literally destroying the purchasing power of the dollars in our pocket in order to enrich. And really, it's not so much the enrichment, because it's more the control, right? They want to be that lender of last resort. They want to have absolute power. And this is what is going to give it to them, in my estimation.
Yeah. I was going to pull up a document for you guys to see. Give me 1 second, please. Here we go. So that was a great chart that you pulled up, David. And David does have a point. The Dixie is dropping now to a 3-year low. And that just, again, signals just loss of confidence in the US dollar. It's continuously eroding. And this doesn't happen randomly, ladies and gentlemen. It's dropping right around the time that they ramped up the Treasury issuance again, as you can see. And what's interesting, days before this treasury issuance began, the gold started front running all of this days in advance. And that's because gold doesn't wait for facts. It anticipates what's coming ahead. And basically markets are just reading all the signals. The dollar is being inflated away, hence to what David said. And what we're seeing is the smart money. They are knowing what's coming next. And these are some of the things we've talked about before. More liquidity, that means more money printing, more asset buying. And what's very interesting, though, is I think we're seeing a convergence and a split of the dollar. I'm writing a paper about this. I was going to talk to Edo privately about this, how the dollar is splitting into two. We're seeing the emergence of $2. We could say, and I think some of this is speculative, but if you look very closely at how things are playing out, you see that the dollar is splitting in two. You're going to see one for domestic use, which may eventually even be linked back to gold. We don't know. I don't think that's really going to happen. The gold will certainly restore credibility to the U.S. As they continue to print the money. And we're going to see one for international settlement, and that's where RLUSD comes into the picture. It's a very compliant blockchain native digital version of the US dollar designed for global use and to expand the reach of the dollar. And I think that's what we see playing out right now. RLUSD is more of a lifeline for the dollar's global role. It's buying them time. It's giving the US a foothold in emerging digital economies. And I still don't think the dollar is going to be a reserve asset anymore. I think it's over time going to evolve into a digital currency, but more importantly, a regional global currency like some of the other currencies there. And that's pretty much where XRP comes into the picture, because again, it allows the nations to settle value without being subject to currency manipulation. And what we're looking at here, ladies and gentlemen, is currency manipulation, capital controls, central bank monetary policies. And these are the kind of things that are essentially going to bring us to that neutral level playing field. So that's what I say. But yes, the dollar is under immense pressure. And I think over time, gold is going to continue to increase in value as they continue to print more money.
Agreed, 100% agreed, yeah.
No, sorry to interrupt you, David. I was pulling out this chart on the screen, and funny enough, I wanted to get the chart specifically of the M2 money supply versus Bitcoin and the S&P 500, so I had to quickly go for a research on Google as I was looking on my computer files. I couldn't find it, and it popped up this article, and you can see that it came from Vandel, co-founder of Black Swan Capitalist, which is not on streaming, by the way, but I want to give him the credits. And it just happened like 2 minutes ago. I was looking for the chart. So you can all see that there's a direct correlation between the price of assets increasing when the M2 money supply increases. And we can see that there was a nice dip on the M2 money supply. And that might explain why I have been making so many bearish calls on the past months and so, and actually the calls were pretty much accurate as we had a meltdown of some assets like Ethereum. Just yesterday we had another crash, 90% on a protocol that claims to be related with tokenization of real world assets. So we see that there has been meltdowns in crypto, and when Bitcoin was about $107,000, the liquidity was very low, and that's correlated with the M2 money supply back there being low as well. But right now we have this massive blast off on the M2 money supply, and that can signal that in the next months to come we might have new all-time highs for crypto assets. And I truly believe the XRPs, the XLMs, the utility tokens that we all speak about are going to be the ones that are going to real benefit from this increase on the M2 money supply, which, by the way, as Versan said before, it already mirrored on the gold price. We see that gold is continuously making new all-time highs. It basically applies for all risk assets, and that's exactly the chart. I don't know if Vandel created this chart. It would be nice to have him here to confirm that he has created this chart, but at least that's what the article is pointing out. Now, there is another quote that I want to share. Give me 1 second. I have to open here on the screen. And that's about the president of the Federal Reserve. So basically, last week he came with this quote here. I think his name is Neil Kashkari. I don't know how to pronounce his name, by the way. And he has come and said that the Fed has tools to provide more liquidity. so that for me really signals that the United States is once again ready to turn on the printing machines. And we all know that as a consequence, we're going to have the assets increasing in price, or we can actually look this exactly as David said before. Maybe it's not the price of assets that are going up, it's just that the US dollar is losing its purchasing power, because the more they print, guess what? The worse it is for the purchasing power of the dollar. And right now, there are two scenarios. I think they have to turn on the printing machines. That's one way to look at it, but that has long-term consequences, which are not great for the US dollar. And I don't know about you, David and
Mhm.
Versan, I want to hear your opinion on that, but I am getting mixed feelings about what happens next for the markets, and I sure want to hear your thoughts on that.
Go ahead, David.
Well, from the way I kind of look at this situation, any asset that's going to be traded against the US dollar has great, potential to appreciate, because I do believe that the dollar is, they are going to increase the monetary supply. That's going to, cause the dollar to, literally collapse. I think we're going to see a drop in its value. That's my personal opinion. I think any asset trading against it is going to appreciate against it. So whether that be a commodity like gold or these digital assets, I think, they are definitely going to happen. And the other issue is this, and I was looking for a clip where I think the new Treasury Secretary was saying this, but basically, they are definitely going to be propping up the US dollar with stable coins. Now, a lot of people have come out there and said, well, Trump is committed to having no CBDC. Well, a rose by any other name will smell as sweet, right? Because, if we're utilizing for institutional trade, global trade, we're going to use stable coins. Those stable coins are programmable monetary instruments. Now, it doesn't have to be a central bank digital currency. It can be whatever, RLUSD, it could be privately issued, whatever, but it is going to be a hand in glove situation. They've literally come out and told us that. And you had I believe it was the Treasury Secretary stating that, look, we are going to back up the dollar with stablecoins. So we're watching a situation where this digital asset space is now becoming front and center for this new monetary system that we're being, ushered into. And in fact, it's already at play. It's already at play. I know it feels like, okay, well, the switches haven't been turned on for the retail market and things like that. That's true. But institutions are heavy into the stablecoin market. And a lot of people think, well, why are they utilizing stable coins instead of actual fiat dollars? Well, it's because stable coins allow them to do a whole lot more than what a dollar denominated type of situation could. For instance, smart contracts and, those type of immediate transactions. We're not having to wait for 3 to 5 days for settlement. It's happening in 3 to 5 seconds. And that's the difference. And when you're talking global trade, and you're watching these markets, which are, let's be honest, involved with the whole thing. They want to tokenize the market. When they're talking real world asset tokenization, come on, they are talking about tokenizing the equities market, the commodities market, all of these markets being tokenized. Why? So they can function at lightning speed and with programmable security. That's why. And so I absolutely believe that what we're watching here is the demise of one system into another system. And of course, for the mental comfort of most people that are opposed to CBDCs, well, what are they doing? They're saying, okay, yeah, we're still going to have cash. How many people hold that much cash in their wallets? Not many. But really, it's the institutional trade, and institutional money is already utilizing digital forms of currency, digital monetary instruments. Whether those are issued by a central bank or by a private company, it is the same thing. At least that's how I see it.
I totally agree with you. And everything you said there, it's all intersecting and accelerating also with the stablecoin regulations. We've talked about this for a while, and it seems like they're moving faster now because they have to. And the infrastructure has already been laid out. And I think the timing is coincidental. At the same time, to what you were saying, Edo and David, they're printing all this money. We see the Fed injecting liquidity into the system before formally announcing anything. And they're, I put a tweet out the other day where they said they were going to use their tools And just to clarify for people what their tools are, they're talking about lowering interest rates. And that's something Trump even talked about in January. That means more money printing, more asset purchases. And all of this is going to inflate the markets, no doubt. But what I think it's important to note is that the smart capital doesn't flood into a bubble. It actually rotates. And historically, when liquidity is flooding into the markets, it's not going to go into a bubble. It's going to go into these emerging asset classes. And in this case, I still believe it's commodities, which include gold and silver. We're also seeing it with T-bills. We saw I just showed you guys the treasury market. So T-bills are being purchased. And then, of course, more importantly, is financial technology, which is pretty much the foundation of the new system that we're going into. And to what David was saying, XRP, RLUSD, tokenized treasuries, and that's what we see happening as well. This is where it's all converging. So it's not about guessing anymore. I think it's about just simply being positioned because I've said this many times, the reset isn't coming. It's been underway for a while.
Totally agree, Versan, and it's also aligned with European standards as well. In October, we are moving towards CBDCs in Europe. That has been previously announced by Christine Lagarde, the president of the European Central Bank. So I see a lot of controversial views, especially on the XRP community, because a lot of people inside the XRP community believe that CBDCs are not happening, but I see that there is a gap between the reality and what these people are believing, because we see Donald Trump, as far as he might say he's against CBDCs, in the same time he's going for dinner with Brad Garlinghouse, Stuart Aljarrah, which, by the way, they work in Ripple. We all know that Ripple is building the CBDC solution. So I would like to hear your thoughts on that. Do you really think that we're not going to see CBDCs, or what's going to happen in the next 24 months, let's say?
Yeah, let me if I can respond. I want to present this. Now, this is I found a clip here that you're watching the current Treasury Secretary, and I'm going to just see if I can maximize this. This is Scott. But do you guys see the screen here?
Mm-hmm.
Okay,
Yes.
let's see if I can't make sure that we get the volume, everything can hear it. Let's just play this. It's only a few seconds.
And we are going to put a lot of thought into the stablecoin regime. And as President Trump has directed, we are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that. Thank you.
I mean, I don't know if you can't get, did you guys hear that there?
Yeah. I actually have this short on the YouTube channel.
Yeah. So when you think about it, I mean, come on, they're flat out telling us that they're going to use stable coins to do it. So I don't care what they say when they come out and say no CBDC. And you're right, Ripple is the #1 developer of central bank digital currencies. Now you think about this. This is a private company that is helping nation states to literally create the infrastructure for the evolution of their money, the central bank digital currencies. They're going to use stable coins in the United States. But like I say, it's going to be the same system, right? I mean, it's just not going to be a CBDC. It's issued by the same individuals that are building CBDCs for nation states, RLUSD. I think it's going to have major impacts. And for the folks that want to discount it and just, talk negatively about, well, that's not coming because Trump said this, said that. I really don't care, because the reality is we will be left behind as a nation if we don't participate in this new digital system. And we are going to participate. In fact, they literally said they want to keep, did you hear that? The US dollar as the world's reserve currency and backing it up with the utilization of stable coins. I don't know how much clearer you can make it.
I totally agree. And I think it's important to also clarify is that while most of these projects that we see in the crypto space, they were focused on getting listed, most of them, or going viral, hype, speculative nature of these assets. But Ripple, remember, from the very beginning, they've been focused on regulation. They've been focused on compliance. They've been focused on institutional integration. And they've had these systems in place long before the regulators even showed up, long before ISO 222 compliance became the global messaging standard. So Ripple was already aligned in advance long before any of this became, mainstream, if you would. And they've been talking about this whole central bank digital currencies. They were openly discussed. Ripple was sitting at the table with the central banks. They were sitting at the table with the IMF, the Bank for International Settlements, and the U.S. Treasury Department. And I focus very closely on the Bank for International Settlements Innovation Hub, and they are still moving forward with this. In fact, they have a map where CBDCs are actively being put together. They're being, implemented, deployed, and tested still. And what did Jerome Powell say once? Federal Reserve made this announcement publicly.
Yes.
They said, we would only use a central bank digital currency in an emergency. Well, if you look at the banking system, it's riddled with insolvencies, delinquencies, defaults. I mean, come on, guys, you got to put the pieces together. And to clarify even more, I spoke about this last week with Edo when I was viciously attacked by XRP Lion. He called me a influencer, and I am certainly not an influencer. I try my best to put the facts together. My point being, if you go back to that video, I raised some very critical questions. Well, if there aren't going to be CBDCs, central bank digital currencies, stablecoins, what are you going to do for about 7.5 billion people? So just simply to say there's not going to be a CBDC is essentially discounting the fact that other people in the world are going to have a unit of account. We can already say that the world is going digital. So if it's not going to be paper money for all those people who are still left outside the system, what is it going to be? It's going to be some sort of digital money. You could sugarcoat it all you want, call it a UBI, maybe because it sounds nicer. You could call it a stable coin because it sounds nicer. But essentially a stable coin or a UBI or even a CBDC is the same thing, really.
It is the same thing. Yes, 100%, Versan. You're absolutely right. This whole concept that, because there's almost a cultural phenomenon around Trump, that somehow he is the deliverer. Now, I think he's a great, representative for a lot of what, conservatives would believe and things like that and that type of thing, not discounting that at all. But, he is absolutely following in lockstep with the financial plan for the infrastructure of the wide world and where it's going. All of the central banks, whether it's the European Central Bank, the Federal Reserve, Bank of International Settlements, you name it, it doesn't matter. They are moving us into a new global monetary system. And what is a monetary instrument? You brought up one big point there: unit of account, medium of exchange, store of value. That's a monetary instrument, whether it is a legal tender or not. That is what it is. And those things are going to have impacts on the way the world works. The UK, actually today, an article had just come out that 40 Labour members of Parliament in the United Kingdom have put forth a bill for decentralized identity, which will go in line lockstep with what the European Union is doing for sure. Now, they know that this is hard to digest for a lot of people over here in the United States, but it will come where it will integrate your financial, your educational, your medical, you name it, everything that there is for you, as an individual. Now, for institutions, they pretty much already have a lot of this in place, right? And the whole idea, of course, is transactional value. When you're talking real world asset tokenization, you're talking about the tokenization of financial markets. And we know that that's coming 100%. And, you think about the equities market. Larry Fink, of course, has come out multiple times now, who, CEO of BlackRock, the thumb in every pie kind of deal, that they want to have the equities market tokenized. Well, that will bring it into the era of being traded 365, 24/7. Now, you just think of what that's going to do in terms of global internet of value, if you will, or monetary shift. It's going to be massive. There's very few ecosystems that have the capability of handling that kind of transactional volume. XRP Ledger is definitely one of them. By the way, on the 21st, there may be an announcement, and listen, this is kind of like has been thrown out there, because since 2023, apparently, Ripple has been working on a pilot project with Swift, and so they may come out and make an announcement soon that, they are going to utilize the XRP ledger in the Swift system. So, should that happen, I think it's going to send the price of these assets insane. But needless to say, whether we believe in it, like it, or not, this new monetary system is being employed, and right as we speak, is being employed.
Yeah.
Totally agree, David. And that's not only speculation. We have a
Yes.
former Swift employee who has confirmed that Swift has integrated the XRP ledger for experiments. And just touching on what you guys said about CBDCs, I totally agree. You can, in the end of the day, if you have juice made of grape and you add alcohol, you can call it grapes juice, but in the end of the day, it's the same as wine. So they are just rebranding the CBDCs, and that's exactly what they have done. And it's very wise to utilize Ripple, because very often the governments, when trying to accomplish something that is controversial, they can misguise themselves as a private company. And I truly believe that's exactly what they have done with Ripple. So if you say, okay, but Ripple issued the real stablecoin, so that's not a CBDC. Well, if Ripple is the government, that makes it a CBDC, and we have all the employees and all the connections that confirm that Ripple is not just the average private company, it's just something beyond that. And a lot of people fail to understand, if we go to track down Ripple's history, is directly correlated with the US government, with the US Treasury. So we can call it a CBDC, it can call it something different, but it doesn't change that the world's moving towards digital. And here's a very interesting question from someone in the audience that I want you guys to answer as well. Someone says, his name is Quantum Freedom. He says, stablecoins, dollar based, are worthless like the dollar. They can't save the dollar. And before I pass the question to you, I want to add my 2 cents on that. And I think it might help to save the dollar's role temporarily as a reserve currency, but I agree it doesn't save the dollar's purchasing power. Now, how do you guys see it?
I mean,
Yeah, I don't think. I'll go ahead, Versan. You get to go.
I mean, that's an interesting question. But the way I see this is that when we talk about these things, you're consistently going to have all these nuances going in circles, not really getting anywhere. I think it's important to clarify a few things. Number one, this isn't a speculative project trying to find relevance. Okay, the way I see it, it's a bridge. It's being engineered to connect the legacy banking system with the digital economy that's rapidly forming ahead of us. This is all about infrastructure. This is about settlement. This is about the foundation for what's coming next. And what's interesting to his question is that most of this has been done quietly. Yeah, we don't really have all the details, but we have to position ourselves accordingly. And I would say that the RLUSD, I've written papers about this before, and I just briefly talked about it moments ago here on this call. It's a way for them to bring that lifeline and to extend their digital influence over the world, okay? And fight for the reserve status. But it's not going to play out that way. It's going to eventually evolve into a global regional currency like everything else, okay? That's how you get to that level playing field where it doesn't kill the dollar necessarily. It helps evolve the dollar and still maintain its influence to a degree, okay? And that's where you have your neutral bridge reserve asset. So yes, I think RLUSD is just buying time for the US dollar. And that's pretty much about it, you know? The more important thing we need to focus on is gold, for instance, physical tangible assets. That is going to continue to rise as the US dollar continues to lose purchasing power, even though the dollar is evolving into a digital currency. So it's very clear what governments and central banks are doing here. They're repatriating physical gold. They're strengthening their role as a store of value to a degree, but it's not necessarily about refinancing the debt. This is about them consolidating physical wealth, physical assets. And the whole idea of a tokenized economy is own nothing and be happy. And what's interesting to what even David said over there, to function in this new digital financial system, I guarantee you digital IDs are going to be required. In a tokenized world where everything is from dollars to treasuries to commodities is on chain, you can't just use money. You're going to have a verifiable identity to prove who you are, where you're located, and what you're allowed to do in this system. I don't believe in the whole thing about saying decentralization. There may be some decentralization to a degree within a centralized framework, And that goes to Ripple's distributed ledger technology, which is building the rails and enabling the use of XRP. So
yeah,
I don't think
remember,
I answered his question, but I think I explained this many times over and over before.
yeah. No, and it's a good explanation. I mean, the reality is the current form of monetary instruments that the world has used to using, whether it's the euro or the dollar, whether that be the US dollar, Canadian dollar, Australian dollar, and it doesn't matter, the peso, the lira, you name it, whatever the monetary instrument is. Those monetary instruments are what Augustin Carson, who's the general manager of the Bank of International Settlements, are basically liability instruments. All they are representations of IOUs back to their own central banks. So let's be clear. The central banks are not, there's the psychological part of this that, people, they know they can't transition everybody over immediately just like that, because it would just be absolute pandemonium and chaos. They are going to transition us in terms of our infrastructure and how the transactional value works. It's obviously going to happen at the institutional level first. It's going to become, standard, with the institutions around the world in terms of efficiency. That's going to be a big one. Then, of course, as it's, brought down into the average everyday citizen, banking the unbanked is going to be a big part of that. Every citizen, global citizen, will be a participant in this system. Yes, you are going to have digital IDs. They're going to bring this in, to combat quote unquote identity theft and illegal immigration, and you name it. That's what, but they're going to bring it in. I mean, we know they had a trial run when this was all going down, and how they can get, pretty much a lot of acquiescence. And having said that, the monetary instruments that the central banks are going to want to issue are ones that are going to be able to be programmable. Basically the monetary policy will be programmed right into the instrument itself. And we are going to move away from, this whole system. Look, in cash already, it is illegal in the European Union to transact even on a private level using more than $3,000 cash or 3,000 euros cash. Illegal. It is a crime, if you can believe that. And there's less and less, tangible currency available, isn't there? I think it used to be 6%. Now it's like something like 4.8 or 5% or something like that. And they're slowly just getting rid of, a cash-based system, completely zero cash-based system. When that totally comes into play, look, you are going to be interacting. Now you can call it whatever kind of unit of account you can call it, whether you call it a CBDC or you still call it the dollar or whatever. It is going to transact on the rails of distributed ledger technology, and it's going to be programmable. And that's where stablecoins are going to come into play. And when you think about that, you're not talking about saving the dollar. What you're talking about is the evolution of the dollar, to answer his question over there. It's not that the dollar really needs to be saved. It needs to be evolved. You're talking about a tadpole becoming a frog or a caterpillar becoming a butterfly. It is a transformation that is going to take place. And it's happening right now. And it's those units of exchange, and it is going to change, revolutionize, literally, in my estimation, how the world will look. Look, 5 years from now, we will look back, and the way credit and debt will work, the way value will flow, it will be so foreign to what it is now that you will not be able to recognize it. And our kids or our grandkids are going to be saying, how did you ever, exist in a world where you are actually dealing with, these kind of instruments? They're going to laugh at us. They're going to laugh at us because it's going to be seamless. It is going to be seamless.
Yeah, and if I can add to that, it's really going to result from a liquidity crisis. Financial transactions are going to slow down. They're going to get to a point where they even halt, and it's not like a minor convenience. I'd say it's systemic to the whole global banking system. The IMF has put reports out about the stability of the entire global economy, and they're going to do this in response to that crisis that they orchestrated, okay? And that's when they're going to bring in a solution. And it's not hype, it's not speculation. And the reason they're trying to eliminate cash, like you said, David, and this is happening on many levels, And more people, even you can look today, even in the US, more people use credit cards and they don't have physical cash. So, I mean, what's even different from a CBDC? It's already digital, right? It's just who's really monitoring those rails, I guess. That's a different discussion for another time. But if they can eliminate, well, if they can eliminate cash, they can actually tax you on your assets. And that's what they want, because you have to look at the fact that we're still in a debt-based system, and that debt-based system is evolving into a digital debt-based system with ever exponential debt, and it never ends, perpetual, unless that system completely dissolves. And I don't think that's going to happen. They're going to have to tax you on your assets to continuously control you, really. And that's why I tell people to use cash to buy physical assets. So there's no digital trace. You have the anonymity. But that's why they're trying to eliminate it.
True, but the only problem that if you ever want to transact that value, so let's say you go out and you buy an ounce of gold and you take cash that you've had in your mattress to go do that. That's all well and good in terms of that transaction. Yes, you have it. But in the future, if you want to actually go and utilize that ounce of gold in order to whatever you want to do, but support your lifestyle, buy an asset or whatever, that's when it's going to be coming back on chain, and they are going to know. It sounds very dystopian, and in a way, that's what it is. I mean, we're talking about something that was literally mapped out centuries ago and thousands of years ago. We were told that a system like this was going to come into play, and it is. It is. I mean, I remember. And this is the perspective I had. I used to be a federal officer, investigating the underground economy, black market, if you will. And I always used to think, well, there's always been an underground economy. How are they going to make it so, regardless of what station you have in life, whether you're rich or poor or great or small or whatever, how are they going to be able to control you? Until I learned about and understood the implications of distributed ledger technology in this new monetary system. It is going to be that on steroids. I mean, the level of information, even if they never used it, just the treasure trove of information. I mean, you think about every transaction that is ever made from the time that currency is created can be tracked.
Yeah, I mean, huge. But this is already happening, hence what I said about the digital IDs. Even look at the EU. They have a digital identity wallet. Look at India. India has something called the Aljarrah, linked financial rails. I don't know if I pronounced that correctly. And now we're seeing even the US, they're pushing for this whole KYC integrated digital ID through the Fed-backed infrastructure. So this is already happening. And I think it raises so many questions, again, about XRP being that neutral reserve bridge assets, because I think to a degree, and hence to what some of the people are saying, that XRP can free you from the system, right? I think XRP, in a way, which is very interesting, it does provide some neutral layer, you could say, between these centralized systems. However, with a digital ID as a passport to operate within the system, then XRP interestingly lets you bridge in and out, and that offers, again, that on and off ramp when the system gets, I think, too restrictive, and that's something we need to be mindful for.
Sorry, didn't mean to interrupt. It becomes pseudo anonymity. So there's a measure of anonymity because you're interacting with a wallet, right? But in actual fact, if you take Chainalysis or other, they will be able to mine down and be able to identify right to the individual. I mean, they can. Now, in every nation state, are they going to have these measures that, the credit scoring system, or what social credit scoring system? I don't think every nation will have that initially, but I do think people will be incentivized to act in certain ways. They are already psychologically manipulating markets now. It's social engineering. And we watched that when this whole thing was going down, how they attempted to social engineer. People were dumping buckets of water on other people's heads because they didn't wear a mask to the grocery store.
Yeah, that shows you how dumbed down the population is, actually. Totally. And sadly, I think I still think it's getting worse, and that's being exemplified by artificial intelligence. You can even see this on the X space. So many people are using AI to put their thoughts out there instead of critically thinking for themselves and putting out their own insight or perspective. And that's just an example, guys. So You know, I think it's going to be very interesting how this actually plays out. But moving forward, the dollar is still under pressure. The banking system is under pressure, despite how we try to sugarcoat it and make it look like everything's okay again. They're propping fake money into the system. And the only good news I could say for, you know, our community here, because we're all investors, we're all trying to, you know, make money and survive at the same time, and deal with the rising cost of goods and services essentially associated with the tariffs, is like, when they start pumping money into the system, again, money is not going to go into a bubble, in my opinion. I think this time it's a bit different. The game has changed. A lot of people can agree with me on this as far as we see direction and misdirection happening at the same time. It's becoming very challenging to actually follow the markets, because one statement from Trump or Elon Musk can change the dynamics in one day like that. And, you know, it's not practical. And that again proves the distortions that we see in markets. So I think where this liquidity, this injected money supply is going to go into is the emerging markets. And that's kind of that final hoorah we talked about a year ago for the US dollar, until it's evolved into that digital system. So you got to be in the right place at the right time to profit from this. And I think cryptocurrencies are certainly going to get pumped up from this. Utility-based tokens, and I think a lot of speculative assets as well. But of course, for our listeners here, I always think about the long-term game. It's better to be invested in use case technologies. If you look at what happened with the Ethereum protocol the other day, Mantra, whatever it's called, Vindel and I, we've spoken to people in our sessions, and we told them to stay away from certain speculative assets. Not that one specifically, but I personally don't invest into anything on the Ethereum protocol. I really don't. I stick to the technologies that I believe are going to be at the forefront of the financial infrastructure. And that is, in my opinion, still, it's Ripple and Stellar as well. Stellar plays a big complementary role into this. Yet
and they're a hash graph as well.
Of course, yeah, that's a complementary ecosystem. Each of them are servicing different niches, again, in the global marketplace. This is not speculation. You go do your research, you'll come to the same conclusion. So just for our listeners here, be in the right place at the right time. And don't forget, you have to take profits, because we're dealing with a situation where the dollars are losing purchasing power faster than we can earn them.
And this is, I think that last statement you made about taking the profit, this is where you want to be strategic in your thinking. And, you know, you have to be able to, because a lot of people are, you know, they don't realize just how this space can literally pull you in directions you never thought you would ever be pulled. You know, it's taken some of the most disciplined minds and, you know, people that have been in the space even a good while, and it has caused them to make some really, really bad decisions because they were not disciplined in their strategy. And that's why it's so vitally important to do that. I've seen that happen time and time again. And so, you know, you've got to be in that position. And how do you make those decisions? You have to have those strategic methods of decisiveness and learn how to employ those. There is a discipline to this space, and something to pick up on that you had said earlier, Versan. A lot of people are acquiescing that, you know, critical thinking and allowing AI to make those decisions for them, which in my estimation, they are not maturing, they're not growing, they're not actually learning how to become a very technological and an astute investor. They're really just still at that level of sentiment investor. And that is a very vulnerable place to be especially in a market that is as volatile as this. Because, you know, your emotions are going to be toyed with in ways that you can't even imagine if you haven't experienced it before.
Yeah, I mean, just to solidify your statement as well, I think, and there's a comment I think I need to address as well, but as the global financial system continues to face these increasing pressures and mounting debt burdens, looming risks of liquidity, we can go on and on forever. As investors, all of us together, we need to have we need to rethink our strategy. We need to not only participate in what is going to protect our capital, but also position ourselves to thrive in the emerging financial system and where this is all going. So I totally agree with you on that. Another statement that somebody made in here, it's a comment: you can borrow against Bitcoin on Coinbase, and then you can buy XRP or any other crypto. That can be can be true for the government. My apologies. I think the problem what we have in our financial system, and especially with a lot of these young traders, there's too much leverage in the system. And a lot of people will say, you know, even Vincent Scott said this the other day, that the whole system is leverage. And he's correct, it is. But actually, it's that leverage which is going to be the catalyst to when we see such a crisis. And you're not going to be expecting it, hence a black swan. And that's why we call ourselves black swan capitalists. We actually make money on bad news because we're anticipating it. And guess what? Elon Musk, Jeff Bezos, and Elon Musk is sitting with the president right now. And Jeff Bezos and Mark Zuckerberg and all these billionaires, Jamie Dimon, why do you think for the last 6 months they've been pulling cash out?
Warren Buffett.
Because, yeah, Warren Buffett too. He's holding billions, I think, right? But they're pulling cash out because they're anticipating corrections that we in the space are hyping. You know, we're not looking at the same thing here. I don't really speculate anymore. I watch the bond market very closely. And the bond market right now is, I mean, they're issuing debt. Hence the treasuries are up there and they're going to be printing more money. But I'm telling you, they own majority of the assets. So they could short this market anytime.
Bang.
And we would lose everything. That's how it works. When you see those corrections, it's usually when the debt market is under pressure, which proves the indication that central banks are still buying the debt. And my point being that if they stop buying the debt, the whole freaking system falls.
Yeah, if they stop issuing $1.
Yeah, it's true. So that's evolving into a digital system. And again, we just need to be mindful that there are all these things happening underneath the surface, and we're not allowed to talk about them, because if we do, you got people from our own community saying doom and gloom. That's not true. We're just presenting the facts. And I think that's the problem with majority of the people in this space. You know, it's like they don't want to address the facts and they want to look at fantasy and think that everything's going to be solved. I mean, Trump, for instance, and I'm not bashing on the guy, guys.
No.
He rug pulled his own supporters the freaking day he got into office with a meme coin. And people will disregard that because it's a conflict of interest with what they want to believe. I mean, that just shows you, you know, the credibility of these people. So I'm sorry, but that's the fact.
And they did it twice. That's even worse. That has actually sucked the liquidity out of the crypto markets.
Yeah.
And by the way, just going back to something David said before, I have said this once in the turning point. I think he was not live with us, but the unemployment benefits in Greece are already paid in a digital version. So basically, the government issues a card and the citizens can only withdraw 50% of that. So basically, they are forced to spend 50% of the unemployment benefits on the digital version. So they are really rolling out the CBDCs. It's happened. Money is going to be programmable. And I just think that everyone should be prepared because the things can escalate very quickly. I mean, it's already happening in Greece. And I see someone in the comments saying that in the Netherlands, they also speeding up with the digital ID for people to access the internet. In the UK, they have arrested hundreds of people just in 2024 because they say something against the government. So you really see that they are coming with heavy control towards the citizens. Heavy, and it's happening live. And I want to share a clip here. I think we enter in the final minutes, but before we close it, I want to share a clip of Brad Garlinghouse. Perhaps you guys have seen it, but let me play it here.
The SEC is going to end up with a $50 million. The U.S. government's going to get $50 million. We even talked about making that available in XRP. The SEC is going to end up with a $50 million. The U.S. government's going to get $50 million. We even talked about making that available in XRP.
So Brad Garlinghouse saying that the U.S. government could be about to receive $50 million worth in XRP. That's about 23 million XRPs. It would position the U.S. government as a top 0.01% holders. You guys want to make some comments on that?
Well, it goes in line with, you know, of course, they have the Bitcoin strategic reserve, and then they have the, what did they call it? The stockpile, right? Of these various digital assets and why would they need one, right? It's for the utilization in the future, right? It's I think that it's almost surreal. It's like literally, to me, watching a movie in real time. It's wild to consider, but you know, we've called these things months out. In fact,
years.
You know, probably years out. And here we are witnessing the very thing. I remember Judy and I were in this space way before the lawsuit dropped. When the lawsuit dropped, you know, me having a background in legislative interpretation, you know, I looked at it and I thought, there is no way XRP is ever going to get determined to be a security. It does not meet any prongs of what they're saying here. Now, contracts that utilize XRP maybe, but XRP in and of itself would not. Well, the amount of hate and FUD that got thrown our way was unbelievable. What ended up happening? Nope, XRP isn't, you know, a security. And, you know, I hesitate to say this, but sometimes I just wonder how much Ripple was involved or knew from day one about this case and it going forward the way in which it has and how it's all unfolded the way in which it has. There's just so much coincidence that it just blows my mind. And I'm not going to come out with all of the, because it would just take up another hour's worth of facts that we can come up with. And you guys know what I'm talking about. But, you know, I think what we're seeing is absolutely surreal. And to hear Brad Garlinghouse say that on that, it's almost something that we basically predicted, you know, to see happen way back before we even knew how this was all going to get settled out. I remember hearing, we were at the time, Judy and I would listen to Versan and Vendel. You know, we were their subscribers. We just love these two kids. I shouldn't call them, you know, they're kids to us. I'm like,
appreciate that,
old, right? You know, but these guys have nailed it time and again, one time after another time after another time, and it has all come to pass. So, you know, the track record is just amazing, really, when you see that.
I really appreciate that.
No, it's true.
Thank you. But you know what's funny is, like, to your point with the SEC, when the SEC initially launched the lawsuit, many people, we were reading this stuff at the time, they thought it was going to be the end of Ripple and they started selling. It's funny, me and Jimmy Valley, we used to be very close and we would sit down together, and when the lawsuit came, Jimmy just said, this is just the freaking beginning. And at the time, you know, when Jimmy was the one who kind of educated on all this, but he made it clear for those who understood what Ripple was really doing, they would see something very different. And then we started doing even more research. But while the media the whole time was covering the legal battle, by the way, still is, right? Ripple was going global. They signed new partnerships. They kept expanding into emerging markets. They're consolidating digital and financial infrastructure. They're opening up the corridors for liquidity. They're buying the on and off ramps. They're in response to that. So that's, you know, what's going to dominate the new landscape across multiple corridors and financial ecosystems, I think. And that's how a company under pressure really behaves, you know. And it shows just again that Ripple, the lawsuit, I know it's a cat and mouse pony show, like you said, you know, they're playing cat and mouse while the same institutions, even in the West, are adopting the same technology while they're playing both sides. And I don't know how people don't see this. And, you know, Eleanor Tourette, whatever her name is, I mean, they continuously keep repeating the same shit, and I'm just kind of tired of it. You know, I want people to more address the facts, and I think this wasn't about you know, the SEC and Ripple. This is really about keeping things quiet and under pressure and suppressing awareness while marketing the hell out of Bitcoin and Ethereum and misleading people over and over.
Biggest rug pull in history.
Biggest rug pull in history, and I think those who have been positioned. I mean, remember, David, when we were in Vegas and XRP started moving, we were like, oh my God, man. And that was life-changing for me because, you know, we got into 18 cents. And this is just the beginning. It hasn't even started yet, guys. Just wait until, if you think 2 trillion right now, I think the total market cap of crypto is what, somebody can correct me here, 3 trillion, whatever.
Yeah, 2-3 trillion. Yeah, roughly.
You're going to see that, roughly at about 120 trillion one day. You know,
well, when you look at the global money supply, I mean, the debt market alone is over $300 trillion. Yeah.
But right now it's all speculative. You know, wait until there's tokenized treasuries, wait until you have tokenized currencies, you have financial ecosystems, you have smart contracts, you have real value. And some people will say, no, it's Bitcoin. Well, you know, I don't think so. It's never about holding it, it's more about creating it, the value. And that's what XRP is doing, and Ripple specifically, you know. So
specifically.
I think we're going to do very well financially. I really believe so. And the trade-off, who knows? Maybe trading off our anonymity for digital wealth, you know?
I think it's not just the trade off. I think, see, the thing is, it's not that we'll really be trading it off. It's just going to be imposed on us. It's not going to be really a trade. It's just going to be what it is. It's, you know, the legislation's going to come in, the market's going to shift, the infrastructure for the market's going to shift. It's all just going to shift. Now, when you think about it in this way, look, how many people are genuinely vested in this space globally in terms of the population? Such a minuscule amount. I've heard people put in the call, oh, they won't let us get that rich. We're not much of a they. We're not much of a they. You know, we're a small smidgen. And so many people are absolutely asleep. It'll be seamless to them just as much as this technology right here, which, by the way, came out in 2007. Now even kindergartners need one when they go to school. Come on, you know. And yeah, it is a sad thing to think that people are acquiescing their own critical thinking, and they have just become more and more entrenched in the fifth estate, if you will. And I think that has to include social media now. Absolutely. You know, not just paper and television and all that kind of stuff. I think it has to include social media, and of course the new explosion of AI.
Yeah, and you know, I'm so sorry, Edo. Yeah,
just go ahead. Share Please. Something relevant before we wrap up, as it's already 56 minutes, so we're almost hitting the 1 hour. Be very careful with scammers. They are getting very sophisticated. I got a new one that people are actually telling me that's happening. So someone is creating a fake voice of myself using AI, and they are texting people on Telegram, which, by the way, I barely use Telegram, only with close people to myself. So if you're getting messages on Telegram, that's a scam. And you guys have to be very careful, because as AI is evolving, and that's also going to speed up the demand for a digital ID, you see how they create the problem reaction solution. So be very mindful of that and don't fall for scams. 100% of the times when I'm going to reach you out for crypto investments or something that is related to install softwares on your computer or trading platform, is always a scam, unless you find us through our official websites. And that goes, I think, the three of us, we have our websites, but be very careful.
Yeah. You will never find me on Facebook, on Telegram, or Discord.
Likewise.
And I won't be sending you messages. Hey, how are your investments? That's not me.
No.
Vendela either. Okay. You guys.
I'm on the YouTube comments. They will reply to your comments on YouTube with fake YouTube channels as well. And they're going to provide some WhatsApp.
Yeah, someone's duplicated me on X and is going out there pretending to be me. It's not me. I will never reach out to people or initiate a contact saying, hey, get a hold of me here. Let's talk. Let's this, let that. We're all available. We all offer services. Those services can be contracted right through our websites to help people get strategic, to do the coachings and all those kind of things. But I'm not going to go out there and solicit you initially. And I'm not going to use WhatsApp. I'm not going to use Telegram, Instagram, or any of those. But yeah, there are people out there that are doing it. One person on my channel got really burned by thinking they were interacting with myself without reaching out first, and really felt like it was my fault. And I'm like, well, hey, you know, we do what we can to clean up all that stuff and get rid of it, but it's still out there. So yeah, you have to be vigilant.
I mean, well, I'm sorry. Well, that's the reason I respond to all my comments. And sadly, I'm not going to lie, I don't have time to reach out to people. I don't have time to respond with great detail to each and every message. But that's why I always put my links in there. Just to let you know, guys, you can always reach me on my personal Instagram. I do post regular stories of my personal life. I put something, I was making music the other night. You know, some people enjoyed that. And my X account, you'll find a lot of good insights over there. I think I did open my messaging system to where you can message me on X now. But, you know, you'll never see us on any of these platforms. So please just reach us directly at the website if you do want to set up a session, book a call. But if it's just some, quick questions, I'm happy to answer that on Instagram. I'll try my best. And again, my time is very limited, and I'm sure you guys too. But yeah, we're trying to stay and keep everyone up to date on everything. So
I spend about 20 to 30 minutes every day just by removing fake accounts, deleting the comments as well, but that's very time consuming, and there are so many that is impossible to beat all of them. And now before it's just impossible. It would become a full-time job, just like blocking fake house accounts as well. Anyways, I think we are hitting the 60 minutes, and if you are watching us, drop a comment, let us know where you are located. So that's going to also help us to reach more people, helps with the algorithm. So drop your location in the comments. That's going to significantly help the algorithm. And thank you, everyone. We are almost 6,000 people live. Going to see you guys next Monday. Any final thoughts, Versan, David?
I mean, well, I would just like to say this. I would just say, guys, we really love the community. I think everybody here wants to help you to make it. You're getting our biased opinion, guys. When you're watching us online, this is our 100% biased opinion. Now, there's reasons why we hold these opinions, obviously. We've done that research. But our encouragement to the community is go out and do that research. Go out and do it for yourself as best you can. Look, if we can talk you into it, then there is somebody out there who can talk you out of it. You want to be able to, educate yourself. That's the biggest encouragement. And we do appreciate all the people that do log in and tune in and that type of thing. You have value for sure.
Yeah. Final thought, Vendel and I'll speak for both of us. We are humbled and we are grateful to the whole community. The loyalty, the support, really appreciate it. You guys are the ones who, show up every time, and I'm truly grateful. But more importantly, I want you to understand this is not just about content. It's not. Did we get disconnected?
No, just 2 or 3 seconds delay. Now it's
you're back. On. It was small freeze. You're on.
Well, I was just closing right now, but I want people to know this is not just about content and just talking about money and things of that nature. This is a real connection that we have together, all of us, right? We're trying to build something beautiful, something bigger together, but it all starts with truth. And I just want to thank everyone, from the bottom of my heart, and Vendel, for just being a part of this and helping us, reach people out there and get the message out. So thank you.
Likewise. Thank you, everyone.
Take care.